Well, good morning, traders. And somewhat ironic, I guess, that the first day that the Federal Reserve start buying corporate bond ETFs, that we see the first 2% down move in the S&P and the Nasdaq since the 1st of May. The data certainly warranted that. I know we've got comments coming out from Dr. Fauci about reopening economies too quickly, and there's factors concerning bank dividends and those alike. But the core CPI numbers dropping 50 basis points was the worst that we've seen on record month on month. If you have a look at the budget deficit, 737 billion, that's just a sign of things to come. And the Treasury Department issuing 32 billion in 10-year paper, totally, I think it's stopped out at 70 basis points, bid to cover 2.69. Very, very strong there. Primary did take up about 20.5%. So very, very strong bond auction. People are still very enthused about buying bonds, even at these very low yields. Let's have a look at the one-year forward OIS market. You can see the top pane in the UK, or sterling OIS, and then the bottom pane US OIS. And you can see here that in the UK now, after the Deputy Governor spoke, that we've got about 2 basis points being priced. So we're nearly at that sort of negative pricing in the UK. In the US, you can see that sits at negative 3 basis points. So despite what we heard from Kaplan and Bullard and the others, the market is still running with this idea that the door is open for negative rates, and that's what they could be pushing depending on how financial conditions evolve. Have a look at the S&P here, down 2.1%. They may be gunning for negative rates, but that's probably going to be coming a lot longer. Nasdaq down 2%. Good volume going through the Nasdaq actually. Not so good volume going through the S&P, but certainly through the Nasdaq it was above average. Turning to the open of Asia, we've got SPY futures down 1.3%. So obviously a bit of a negative situation there. Actually, got Hang Seng futures up slightly. Nikkei futures down 2.1%. Have a look at the moves in fixed income. Certainly a bit of buying coming through in all parts of the curve, really. And actually, in terms of vols, you've seen the VIX pushing up 5.5 vols up to 33%. ETFs, given that the Fed are buying now, you can see that the investment grade up 1%. So obviously that's going against the tide there. So clearly the Fed active there. The high yield ETF actually down 0.1% there as well. In terms of FX markets, well, clearly risk off, although the NOK is up about 1.5% given the moves we've seen in crude. But you can see the high beta FX under a little bit of pressure there. So one to watch. Obviously all eyes on Jerome Powell later on today.